The government says your overtime is now tax-free, but is it really? The government has made a huge promise with the newly signed One Big Beautiful Bill Act, and the headlines are everywhere saying your overtime pay is now completely exempt from taxes. It sounds incredible, right? A long overdue break for millions of hard-working Americans. The idea that every extra hour you work puts more money directly in your pocket untouched by the IRS is the kind of financial win we all dream about. But what if that dream is built on a massive misunderstanding? What if the government left out a few crucial details in their big announcement? The truth is, the story they're telling isn't the whole story. And blindly believing your overtime is now completely tax-free could lead you to make a huge tax mistake. One that could leave you with a surprise bill for thousands of dollars come tax time. Before you start volunteering for every extra shift, you need to understand the hidden catches, the fine print, and who actually benefits from this law. Because what you don't know could absolutely cost you. All right, so let's just rip the Band-Aid off and clear up the single biggest point of confusion. Despite what the headlines are screaming, your overtime pay is not fully exempt from federal income tax. Let me say that again because the most important sentence in this entire video. Overtime is not tax-free. What the new law actually created is a tax deduction. And I know deduction sounds like boring tax speak, but the difference here is critical and it could be worth thousands of dollars. Think of it this way. A new tax exemption would be like a magic shield making the money invisible to the IRS. They wouldn't tax it at all, and that's what most people think is happening. But a deduction works differently. A deduction is more like a coupon that lowers the total amount of income the government gets to tax. It reduces your overall taxable income, which in turn lowers your final tax bill. It's a fantastic benefit, but it's not a 100% free ride. And this leads us to the first major catch that almost everyone is missing. This new law only affects your federal income tax. It does nothing necessarily for your other taxes. That means every single dollar of your overtime pay is still subject to payroll taxes. It's that 7.65% of Social Security and Medicare that's taken out of your check, no exceptions. And on top of that, unless your state decides to pass its own law, which normally Missouri and Kansas will follow along, but if you're in other parts of the country, especially those with high income taxes, this could be a huge piece of the puzzle. So the idea that this money is completely tax-free, it's just not true. You're getting a break from the federal government, but everybody else still wants their cut. So if it's not a full exemption, what's the real benefit? And this is where we need to look at how your paycheck is actually built. The new deduction doesn't apply to your entire overtime payment. It only applies to the premium portion of your pay, meaning the amount paid in excess of your regular hourly rate. So let's break it down with a simple example. Imagine you're an hourly worker and your regular pay rate is $20 an hour. This week, you're a rock star and work 50 hours. That's 40 regular hours and 10 hours of overtime. Your pay for the 40 regular hours is $800, simple enough, and is taxed just like always. But now for the 10 overtime hours. Federal law says your employer has to pay you time and a half. At a $20 rate, your overtime rate is $30 per hour. So for those 10 hours, you're in $300. But here's how the government sees it, and a lot of people are going to not understand this. It's made of two parts. The first part is the straight time pay, which is 10 hours at your regular $20 rate. That's $200. That part is still fully taxable. The second part is the overtime premium, the extra money you get for working longer. In this case, that's an extra $10 per hour for 10 hours, which comes out to $100. That $100 is the premium pay, and that's the only part that's eligible for the new federal deduction. So out of the $1,100 you earn this week, only $100 of it qualifies for this new tax break. You can deduct that $100 from your total income when you file your federal taxes, and it will lower your tax bill. And I'm not going to lie, that's real money back in your pocket. But it's a far cry from your entire $300 in overtime being tax-free, and I know that's what most people think is going on. So now we know how it works. The next question is, do you even qualify? Just because you work overtime doesn't mean you automatically get this deduction. you have to pass 3 critical tests. Now, this is the big one. This deduction is specifically for workers classified as non-exempt under the Fair Labor Standards Act. These are typically hourly workers like electricians, nurses, retail associates, construction workers who are legally entitled to overtime pay. You could also be a salaried non-exempt employee like an administrative assistant who has to track their hours. However, if you are an exempt employee, you're out of luck. Exempt employees are usually salaried workers in professions or management roles who aren't legally required to get overtime pay. If you're a manager who gets paid the same salary whether you work 40 hours or 60, this deduction isn't going to work for you. If you're not sure, check your pay stub or just ask your HR department. You need to know if you are exempt or non-exempt, and this is critical. Now, this is a sneaky detail. Test 2 is going to trip a lot of people up. The deduction only applies to overtime mandated by the federal FLSA law, which is pay for hours worked over 40 in a single work week. In some states, though, like California, they have much more generous overtime laws. So when you get overtime for working more than 8 hours in a day, let's say you work a 10-hour shift on Monday, but only work 30 for the whole week, in California, you would get an extra 2 hours of overtime. But because you didn't work over 40 hours in a week, that overtime is not federally mandated. As a result, it does not qualify for the federal tax deduction. Only overtime from crossing the 40-hour weekly line counts. Finally, even if you meet the first 2 tests, you could be disqualified if you're a high earner. This benefit is intended to be targeted at low and middle income workers. The law is expected to include income limitations that will reduce or eliminate the deduction for people earning above a certain amount. While the IRS is still finalizing the details, right now they're saying $150,000 for single, $300,000 for joint are the specific income thresholds as of mid-2025. And this is a critical detail to watch out for because that means a lot of people may not even qualify for this at all due to the phase-outs. All right, so let's talk about the practical side of this. Even for those who do qualify, the benefit isn't unlimited. There's a cap on how much you can deduct each year. $12,500 for an individual or $25,000 for a married couple filing joint. To be clear, that's the maximum amount of overtime premium, and we discussed that a minute ago. The maximum overtime premium you can deduct, not the tax savings. And most workers would have to work a massive amount of overtime to hit this cap. But it's an important ceiling to know about. Now for some good news. Claiming this deduction is going to be very simple. It's going to be an above-the-line deduction, which means you don't have to itemize, so that's good news. And you can claim it right on the main Form 1040, which makes it available to everyone who qualifies, even if you take standard deduction. To make this possible, your employer has a new responsibility. They are now required to separately report your total qualified overtime compensation at the end of the year. Well, guidance from the IRS on exactly what this looked like is still pending. My guess is they're going to have to add an extra box to the W-2. We're just going to have to wait and see what that looks like, but it's going to have to happen in some form or fashion. And now for the final catch, and it's a big one. This law isn't even permanent. It's a temporary provision set to last for only 4 years. It's only in effect for 25, 26, 27, and 28, and after that, it's gone unless Congress decides to extend it. This means we have a limited window to take advantage of this benefit. So, with this new law in play, what should you do right now? First off, for employees, your top priority is to confirm your FLSA status with HR. Are you exempt or not exempt? And that's key to this whole thing. Second, keep a close eye on your pay stubs to make sure your overtime hours and pay are being correctly tracked. Third, when you get your W-2 for 25, immediately check that your qualified overtime premium was reported correctly. Now, a quick word of caution. Be wary if your employer suddenly decides they want to change how they classify you or you get paid. If you're a business owner, do not attempt this without professional guidance. The FLSA has very strict rules, and companies that try to game the system can face massive penalties. Finally, how should you plan for this? This law is retroactive to January 1st of 2025. So any qualifying overtime you already worked this year counts. However, I would strongly advise against changing your W-4 withholding at work to get more in your paycheck right now. These rules are new. We still don't have everything spelled out, and it's always better to get a little bit larger refund than to risk owing the IRS a big check because of a miscalculation. So back to the big question, is overtime really tax-free now? Well, hopefully by now you understand the answer is a clear no. But for millions of eligible American workers, the cost of working overtime just got a little lower. Now let's recap the reality. First, it's a federal income tax deduction, not a full exemption. And it only applies to the premium portion of your time and a half pay. If you didn't get that, go back and rewatch that part of the video. Your earnings are still fully subject to Social Security and Medicare, and in a lot of cases, state and local taxes too. You have to be a non-exempt worker. You have to work federally mandated overtime and fall under the income limits to qualify. And don't forget, this benefit is capped and it's temporary, set to expire after 2028. The headlines were designed to grab your attention with a simple promise, but the reality is much more complex. By understanding these rules, you can navigate this new landscape with confidence. You can make sure you get every single penny of the tax break you deserve without falling into the trap of a costly mistake. When it comes to your money, knowledge isn't just power, it's profit. So if this video helped you understand this complicated new tax law, do me a favor, hit the like button, subscribe for more simple breakdowns of the financial news that actually affect your wallet. And I want to hear from you. Let me know in the comments, will this new deduction make a difference for your family? I'd love to hear about it. Thanks for watching, and I'll see you in the next video.